I don't expect real economic pullback. I don't expect real austerity in the US. I think that would be good for the country long term, but I don't think Washington really has the spine to put us through that. We could go back to 72, but I really think if you look at the text of the executive order, what's written in there is words that will drive Bitcoin to multiple hundreds of thousands of dollars. Yeah, 200,000 by the end of the year is our official forecast. We made that in December of last year, and we think it's still our base case. I think we'll get to that soon.
According to Hougan, two simultaneous forces are influencing the market. On one hand, macroeconomic jitters, concerns over tariffs, economic slowdown, and potential recession are creating a broad sell-off across risk assets. This uncertainty has been exemplified by the Nasdaq's recent 4% drop, one of its worst performances since the financial crisis. Naturally, such turbulence spills over into Bitcoin, given its increasing correlation with traditional financial markets. At the same time, the market has reacted negatively to the recent executive order establishing a strategic Bitcoin reserve. Many investors expected the government to make a significant upfront purchase of Bitcoin, but that didn't happen. Instead, the executive order mandates an investigation into ways to incorporate Bitcoin into the national balance sheet. This led to disappointment and contributed to Bitcoin's pullback to the $80,000 level.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think there are two things that are happening in the market simultaneously, and it's important to think about them separately. So you mentioned at the top, on the one hand, we have these new macro jitters, right? The world is starting to price in the possibility that tariffs and Doge might drive the US economy into recession. And that's affecting all risk assets. We saw the NASDAQ have a negative 4% day yesterday, one of the 10 worst days since the financial crisis. So it's a big deal, and that trickles over into Bitcoin. And then we have somehow the market having expressed disappointment with the executive order establishing a strategic Bitcoin reserve. And that is also negatively impacting the crypto market. So you combine those two and you get this pullback to 80K. As I look at it, my base case, and we can dig into them, is that both of these are the wrong assumption. I think there is risk on the macro side, but broadly speaking, I think the economy or the government will blink before we actually drive into a recession, but we can debate that. On the executive order side, I'm 100% confident the market is just wrong. I think that was the most bullish version of an executive order we possibly could have gotten. I think the market has overlooked what the executive order actually says, and I think it will soon realize that that's a bullish catalyst. So if we can equalize on this economic front, then I think there is sort of dry powder to catalyze us forward from the hangover from the executive order. You're pointing in the right direction, which is the market is upset that the executive order didn't, call for us to smash by 200,000 Bitcoin a year. But executive orders can't do that. They don't control the purse strings. What it said is that the Secretary of Commerce and Treasury shall investigate ways to add Bitcoin to this balance sheet as long as it doesn't negatively impact shareholders. Not that it may or that it could, but that they shall do it. And so what I expect them to do is to find ways to add Bitcoin. I do think they may look at selling some gold to balance the government's hard asset store. I think they'll look at other ways to add Bitcoin. But regardless, I think the number of Bitcoin that's in the reserve today is the minimum number, and it's likely to go up in the long term. And more than that, the signaling this provides to other governments around the world, I think will catalyze a race to acquire Bitcoin. So I just think short-term investors are asking the wrong question. It's not, is the government going to buy my bags in the next 2 weeks? Is the executive order pushing us towards a world where Bitcoin is an important macro asset that's being purchased and held by governments around the world? And viewed from that lens, it's literally the most bullish executive order text that we could have imagined. I think it's a strong positive, and I just think the market has it wrong. From my view, if you're investing in Bitcoin, you're making a bet that it'll be worth $1 million in the future, right? That it's undervalued by a factor of 5 or 10 or 20. And so whether you buy it 80 or 70 or 90 or 100 is almost irrelevant to me. I do think there's some risk we trade back to like the $72,000 level, which was a previous level of support, previous all-time highs, pre-election. So I think there's that level of risk. The way to think about the market is during bear markets, the market ignores good news. It doesn't go away. It just gets sort of stored as future energy. And I think that's what's happening now. The market is ignoring the good news. What that means for me is, when will we turn? I don't know. We'll probably turn when the market starts to feel comfortable from a macro perspective that either we're going to get lower rates or stimulus checks or some sort of quantitative easing. Once the market sort of accepts that that is going to end up happening, we'll probably bottom from a macro perspective, and then all this good news will rapidly get repriced. So to summarize, we could go back to 72, but I really think if you look at the text of the executive order, what's written in there is words that will drive Bitcoin to multiple hundreds of thousands of dollars. And so, I wouldn't be too precious trying to time the exact bottom in this market. Yeah, 200,000 by the end of the year is our official forecast. We made that in December of last year, and we think it's still our base case. I think we'll get to that soon, right? I mean, in the end of the day, for the last 17 years, every time there's been an economic ripple around the world, politicians have talked tough, but ultimately buckled. It's too easy for them to push the easy button and gain favor from voters by bailing out the economy at any sort of sign of weakness. I think we're going to see that here as well. So I don't expect real economic pullback. I don't expect real austerity in the US. I think that would be good for the country long term, but I don't think Washington really has the spine to put us through that. So once we see Washington blink in some way, shape, or form, it could be from Fed officials talking about lower rates. It could be from renewed talk about Doge stimulus checks. It could be from renewed talk of lower taxes. As soon as we see that kind of response, I think we're bottom and we're off to the races. And you make a good point about Bitcoin falling first and bouncing first and higher. If you look at the days the S&P 500, the leading equity index, has fallen 2%. Bitcoin falls more than that. I think it's 90% of those days. But if you look 2 or 3 weeks out, it's recovered all that and 4 or 5 times that. And I expect that to be the case now. I think an investor looking how to hedge this current economic uncertainty would be crazy not to have a core position in crypto. It's just been the best tool for that for long-term investors for the past 10 years. And I think it's better positioned than ever. So, soon enough, we will get there.
Traditionally, altcoins have been treated as high beta versions of Bitcoin, rallying in a classic alt season pattern following Bitcoin's price moves. However, he believes this dynamic is changing. Now, individual altcoins will be evaluated based on their actual utility and adoption. Ethereum, for instance, will be judged by activity on Layer 2 networks, stablecoin transactions, DeFi adoption, and tokenization trends. Hougan anticipates a divergence in performance among altcoins, with only those demonstrating strong real-world use cases seeing sustained price appreciation.
We think there are 3 major sources of insatiable demand for Bitcoin. There's Bitcoin ETFs, and we have one of the largest ETFs in BITB. There are governments, as you and I have been talking about, Zach. And then there's corporations, which we think are increasingly putting Bitcoin on the balance sheet and following the Bitcoin standard. There are now 70 publicly traded companies around the world, actually more than that collectively own about 650,000 Bitcoin. And we think that number will double or triple in the year ahead. So we launched a new ETF, OwnB, that owns companies that have 1,000 plus Bitcoin on their balance sheet. We think these are among the most forward-thinking companies in the world. They're firms, of course, like MicroStrategy, but behind MicroStrategy, there are dozens of other companies following that playbook or diversifying into Bitcoin. And if you want them all in one fund, you now can get them through OwnB. So we're excited to get this into the market. There's going to be more funds to follow, but I love seeing it out there and a great iconic ticker. And I think it's going to be an important ETF long term. I think people's thought on how to value those assets is changing. I think there's this perception that altcoins could be just treated as high beta versions of Bitcoin that would rally subsequent to Bitcoin in a classic alt season cycle. And I actually think we're moving into a new regime where those assets are evaluated independently on their metrics and tractions. So as you look at something like Ethereum, I think what you really need to look through to the activity on the layer twos, look through to stablecoin activity, tokenization activity, AI agentic activity, DeFi activity, and see where those are going. And eventually that'll get priced into Ethereum. But my guess is once you get beyond Bitcoin, we're actually going to have lower correlations between these different coins that we have in the past. I think they're moving into sort of their utility phase. And so it's really going to matter, are they attracting users? Are they attracting new important applications? And I think you're going to see sort of a rapid separation of the good ones from the bad ones. I think the bottoming process could take longer in those assets than it does in Bitcoin for that reason, because people will be waiting to see those users arrive. I think Solana could face some challenges on that front right now. If you look at what people are excited about, they're excited about stablecoins, tokenization, and AI. And I think the chains that you're seeing grab traction in those markets are Ethereum and layer twos, maybe chains like Near. I think those may become darlings, and Solana may have to sort of re-find its footing. Ultimately, it's incredible technology, and their sort of core long-term user growth is really substantial. But if you think of Ethereum sort of suffering from a narrative gap in 2024, I think there's at least a risk that Solana suffers from a narrative gap as it transitions from meme coin sort of focused activity to more real world asset focused activity. I think it ultimately will. I think there'll probably be an amazing buying opportunity in Solana. But if you think about sort of the sine wave of those various narratives, I think Ethereum is probably on the upslope, and Solana is maybe curling around and trying to find its sort of next narrative flow. If you're thinking long term, the case for Solana is extraordinarily strong. And what we proved through this sort of spike in meme coin activity is that it's tremendous throughput, it's got tremendous flexibility, it's tremendous proof of concept. And I agree that DePIN has a meaningful place there. I wouldn't own a portfolio of crypto assets that didn't include Solana. I think it's that important to the ecosystem. I'm just saying that from a narrative perspective, we're going to have to wait for this other piece to bubble up on Solana before it gains that attraction. So again, long-term investors, phenomenal entry points. I think they're going to 100x their users over the next handful of years. But you have to think about that narrative flow as well, and they're just at different points in that cycle.
While Solana remains a leading blockchain with impressive technology, it faces a short-term narrative gap. Previously, Solana saw a surge in speculative activity driven by meme coins. However, as the market transitions toward real-world asset adoption, Solana needs to establish its role in this evolving landscape. While its long-term potential remains intact, its short-term trajectory depends on how well it adapts to emerging trends in stablecoins, tokenization, and AI-driven applications. Please like and subscribe.